The banks that mocked Ripple are now quietly getting in line. Just a few years ago, Ripple was the underdog. A tech disruptor trying to fix a problem the bank swore didn't exist. Cross-border payments? Handled just fine by SWIFT. XRP? An unregistered security. A useless token. A scam waiting to implode. In boardrooms, XRP was the punchline. In headlines, Ripple was the target. And in the halls of regulation, they were the warning label. Fast forward to now, everything's flipped. Those same banks that mocked, dismissed, and tried to slow Ripple down, they're now quietly getting in line. Not because they want to, but because they have to. Behind the curtain, financial institutions are scrambling, testing RippleNet infrastructure, modeling cross-border flows using XRP as the bridge, requesting meetings, signing NDAs, running pilots, and preparing their systems to settle through Ripple's new enterprise-grade stablecoin. They're not making YouTube announcements. They're not tweeting about it, because they don't want you to know Ripple is winning. This isn't some temporary wave of interest. This is what it looks like when the legacy financial world admits defeat. Not with press releases, but with quiet integration. Because while the market was distracted by memecoins, ETFs, and speculation, Ripple was building a fully compliant, globally scalable infrastructure. And now the institutions are coming to plug into it. The very ones who tried to pretend Ripple didn't matter. Ripple didn't just survive the attacks. It absorbed them. It used them to become stronger, sharper, more regulatory ready. Now it's too important to ignore and too far ahead to catch. And the banks? They're not leading anymore. They're following fast. So if you're watching this, you're already ahead of the herd. If you're ready to understand what's really happening, before the headlines catch up, like this video, drop a comment below. Tell me where you think XRP is heading next. Subscribe to the channel for the signal, not the noise. And hit the bell so you're first to know when the next move drops. Let's get into the full breakdown, because what comes next doesn't look like the past. From lawsuit to legitimacy, how Ripple flipped the script. To understand how banks suddenly started flipping toward Ripple, you have to rewind the clock. Because not long ago, Ripple wasn't just the underdog, it was the target. From the moment the SEC filed that now infamous lawsuit in December 2020, Ripple was painted as the black sheep of crypto. News outlets ran with headlines like, "Ripple is finished." Crypto influencers mocked XRP holders as delusional. And institutions, most of them, pulled back, waiting to see if the entire thing would collapse. But while the world was focused on the lawsuit, Ripple was focused on something else. Execution. They didn't disappear. They doubled down, quietly securing partnerships, expanding RippleNet, building on-demand liquidity corridors, and strengthening regulatory relationships across Europe, the Middle East, Africa, and Asia. While everyone was debating XRP status in the US, Ripple was building a network that didn't need US approval to operate. That was the first sign the banks started paying attention. Because even under regulatory fire, Ripple kept growing. And that's not normal. In fact, banks started noticing that Ripple was still signing deals with financial institutions, still expanding into new regions, still improving the efficiency of cross-border settlements, and still doing what the traditional banking system couldn't: move money fast, cheap, and transparently. That's when the tone began to shift. Behind closed doors, banks that once scoffed at Ripple were asking questions. Not about price, but about infrastructure. They wanted to know how RippleNet could eliminate the need for Nostro/Vostro accounts, how XRP could function as a bridge currency in real time, and most importantly, how Ripple managed to stay compliant while most crypto companies were getting slapped with lawsuits. And suddenly, the conversation wasn't, "Is Ripple legit?" It was, "How fast can we integrate before our competitors do?" This wasn't a lucky break. It was a strategy Ripple had been building toward for a decade. And once the lawsuit ended in Ripple's favor, with XRP officially not a security for secondary market trading, the floodgates didn't just open. The banks started flipping, one by one. Inside the flip, what banks are doing behind the scenes right now. Let's clear something up. When banks pivot, they don't post about it. They don't host press conferences, and they definitely don't say, "We were wrong." In high finance, public admissions of failure are off the table. But strategic repositioning? That happens every day quietly. And if you listen closely right now, you can hear the sound of the world's biggest institutions doing exactly that. Flipping, adjusting, integrating, and rebuilding their future on Ripple's infrastructure. Because in this world, it's not about being first. It's about being last to fail. So what exactly is happening behind the scenes? 1. Running XRP liquidity simulations. This isn't a thought experiment anymore. Banks, remittance services, and payment processors are actively modeling settlement flows using XRP as the bridge currency. Why? Because XRP eliminates the need for Nostro and Vostro accounts, meaning banks no longer need to tie up capital in foreign currencies just to settle international transactions. What does that mean in real-world terms? Capital unlocked. Settlement times cut from days to seconds. Fees reduced to nearly zero. Cross-border risk minimized. Banks are discovering that XRP isn't just a token. It's a utility layer, a dynamic, liquid bridge that functions like a digital lubricant in a system that's been grinding for decades. 2. Building live payment corridors with RippleNet. Forget sandbox testing, this is the real thing. Banks from the Middle East, Asia-Pacific, Europe, and even parts of Africa and Latin America are already deploying RippleNet corridors for active use. These corridors aren't theoretical. They're moving real value in real time for real institutions. And the benefits are obvious. Full transparency on settlement. No delays from intermediaries. Instant confirmation and traceability. The ability to serve markets traditional banking rails can't reach. In fact, in regions with fragmented banking infrastructure or heavy remittance activity, RippleNet is being adopted not as an alternative, but as a primary solution. Banks that once leaned on SWIFT are now treating RippleNet as the future standard. 3. Testing and preparing for Rust integration. Now here's where the quiet flip turns into a full-blown foundation shift. Ripple's launch of Rust, their own enterprise-grade stablecoin, is the final piece of the puzzle. Why does it matter? Because banks have been desperate for a stablecoin they can actually use. Let's break it down. USDC, under increasing regulatory pressure. USDT, ongoing concerns about transparency, audits, and collateral. Algorithmic stablecoins. After Terra/Luna, completely radioactive. What Ripple is offering with Rust is different. 1:1 backed by real reserves. Fully compliant from day one. Transparent, auditable, institution-ready. Designed for speed, security, and instant global settlement. Banks don't need hype. They need certainty. And Rust was engineered specifically to meet that need. So what happens when you combine RippleNet's global payment rails, XRP's deep liquidity and bridging capabilities, Rust's regulatory compliance and fiat integration? You get something banks have never had access to before. Real-time, frictionless, multi-currency settlement, global reach with local precision, institutional-grade performance with crypto-native efficiency. And for the first time, they're not waiting for regulators to figure it out. They're acting. And here's the twist. Some of the world's biggest financial institutions aren't just testing Ripple's tools. They're rebuilding their internal systems around them. That means replacing legacy rails, automating liquidity routing using XRP, embedding Rust into digital wallets and treasury flows, and positioning themselves ahead of the next phase of cross-border finance, before it becomes a global standard. In short, they're not just interested in Ripple. They're integrating it. They're not just flipping. They're restructuring their architecture around Ripple's core technologies. And while the public thinks it's business as usual, Ripple is quietly becoming the operating system of the new financial world. Ripple's quiet takeover, the new backbone of global money movement. If you've been watching closely, you'll notice something strange happening in the global financial system. Not loud, not viral, but relentless. While everyone else is talking about token prices, ETFs, and meme coins, Ripple has been focused on something very few crypto projects even attempt. Infrastructure. Not hype, Not headlines, but actual working rails that institutions, banks, governments, and payment providers can build on. And more importantly, trust. For years, financial systems across the globe have relied on legacy networks that were never designed for speed, transparency, or inclusion. Delays, fees, settlement bottlenecks, and operational risks were just part of the game. Ripple saw that and quietly started replacing the pipes underneath it all. Not by disrupting from the outside, but by embedding from within. They didn't scream decentralization from the rooftops. They said, here's a faster way to move money. Here's a smarter way to handle liquidity. Here's a compliant solution to modernize cross-border payments. And that's how it started. Now, in over 50 countries, banks and financial institutions are connecting to RippleNet. Not to speculate, but to survive. Because what Ripple offers isn't just innovation. It's infrastructure that works better than anything they've ever used. It settles instantly, operates 24/7/365, removes the need for pre-funded accounts, and reduces risk, cost, and complexity all in one stack. And with the launch of RippleNet, Ripple didn't just give them speed. They gave them a stable, regulated asset they can use to settle instantly, without depending on volatile crypto assets or broken stablecoins. Ripple is doing what few projects in the space ever achieve. They're becoming the rails and the train, the platform and the settlement, the bridge and the destination. And here's the part most people miss. Banks aren't flipping because of ideology. They're flipping because Ripple finally gives them a toolset that solves real problems. And in a world moving faster every day, where cross-border commerce, digital identities, CBDCs, and tokenized assets are about to explode, banks don't have time to wait for old systems to catch up. They need something that's already built. And Ripple is already live, already regulated, already integrated. This isn't a test run. This is a transition. And whether the public sees it or not, whether regulators move fast or slow, whether price reacts today or tomorrow, Ripple is moving forward with or without the crowd. Because the most powerful players in finance aren't asking, will Ripple work? They're asking, how fast can we switch? The dominoes are already falling. At this point, it's not about if banks will adopt Ripple. It's about who flips next and how fast they can catch up. Because once the first few institutions made the jump, integrated RippleNet, tapped into XRP liquidity, started testing RippleNet, a clear message went out to every other player in the financial system. Adapt or fall behind. And that message is spreading fast. Payment giants are joining pilot programs. Central banks are exploring integrations. Remittance companies are onboarding Ripple corridors. Fintech platforms are quietly embedding Ripple's tools beneath their UIs. What used to be experimental is now expected. What used to be a bet is now standard procedure. Ripple has gone from being a controversial outsider to becoming the default infrastructure for how institutions think about cross-border payments, tokenized assets, and future-ready liquidity. And that kind of shift doesn't happen randomly. It happens when momentum is so strong, so obvious, that ignoring it becomes riskier than embracing it. So where does that leave XRP? Right at the center. Because as banks integrate RippleNet, as they begin to experiment with RippleNet, as they build infrastructure around Ripple's stack, XRP isn't just along for the ride. It's becoming the bridge that makes the entire system move. It's not a speculation tool anymore. It's the rails beneath a global financial network that's already operational. The same asset that was dismissed, ridiculed, even sued, now sits at the center of a real-time, bank-approved, institution-grade settlement layer. That's not a pivot. That's a quiet revolution. If you're watching this and still thinking, I'll wait to see what happens, let me be clear. It's already happening. The dominoes are already falling. And the ones who understand this now, before the rest of the world catches up, will be in a position few will ever get to experience again. If this breakdown helped you see the bigger picture, do me a favor. Hit the like button to push this out to more people who need the real story. Drop a comment. Tell me which institution you think will flip next. Subscribe to the channel so you stay ahead of the noise, not buried under it. And tap the notification bell, because we're just getting started. New money is being built. And Ripple is laying the foundation.